So what we're gonna go over today, guys, is you guys know I've been preparing these slides, right? So there's a lots of slides. So I'm gonna group it into 3 streams because I can't go over them all in detail in 1 hour. It's just not gonna happen. So the first section or first slides, first stream is gonna be going over the core concepts that we trade and how to put them all together. So go back a little bit here. So phases of price delivery, that's one of the core concepts. Swing formations, right, on all time frames, and open, high, low, close, and like that means like profiling essentially, and obviously like models. So we're incorporating all of these things around models, which models are just reversal points to targets, if you really think about it. That's it, right? So let's go ahead and full screen this real quick. Right. So these concepts are used to further support price anticipation from reversal points to targets models, right? So let's go over phases of price first. So what can price do and not do? Price always goes from consolidation to an expansion. Price can go from an expansion to a retracement. Price can go from an expansion to a reversal, and price can go from an expansion to a consolidation, right? Price never goes from a consolidation to a reversal, and price never goes from a consolidation to a retracement. Every phase of price starts and ends with expansion. So we're going to go over more so the signatures of each phase and whatnot. So within expansion, you want to be within an expansion candle, right? The key thing to take away here within an expansion candle, how do we tell we're within an expansion candle? It's going to be this small wick, right? That we all know about, right? That's how we actually delineate that we are within an expansion candle. Right, so what about or what about the expansion signature? So within this candle, you're going to have an expansion, right, that makes up this candle, obviously, right? So the signature of expansion is opposing candle supporting price towards ERL or IRL. ERL or IRL just being the draws on liquidity. Those are the only things we target. Also maybe like premium discount of a range, but you know what I mean, right? We want to see PD arrays like fair value gaps and opposing candles support price to our draw on liquidity, to put it really simply, right? In a bullish expansion, we want to see lows being rejected and highs being displaced through. So as you see, we reject this low and we displacing through the highs. And we also want to see shallow retracements. This is a big one, right? Because this is also how we can identify low probability conditions, or just we can also use it as an invalidation point, right? We don't want to see price retrace all the way down here into like OTE. I think OTE personally is like an invalidation. Now this is specifically within expansion away from a reversal point on its way to the objective, right? On its way to the objective, right? So once it hits the objective, then we can retrace. That's when we can get a new phase of price, right? But on our way there, we want to see shallow retracements. So what is a continuation signature? So we want to see continuation signatures on our way to objectives, right? Because these are going to be, right, shallow retracements, and they're not reversal signatures, right? So we're more likely to continue towards those objectives that we're targeting, right? So continuous signatures are simply consolidations, right? As we mentioned, we don't reverse from a consolidation. Price never goes from a consolidation to a reversal, right? So we want to see consolidations on our way to objectives, kind of like a market maker model, right? And as well as you want to see retracements. At the point of retracement, we want to see failure swings, right? Because price doesn't reverse from failure swings generally. So what is how do we like engage with consolidation? What are the signatures of consolidation? So after price expands into an objective and we consolidate, this generally means we're going to at least expand into the consolidation high, right? And this also is what you want to see if you have objectives maybe beyond this objective, right? So maybe on your way to an objective, you take out a relevant high or low, right? This is what you want to see as a consolidation, a failure to manipulate this high. And the way we engage price, if price doesn't actually take out this consolidation low, which is always ideal, if you don't, take out the consolidation low, then we need to see a continuous signature through the consolidation high, right? Which is something that AM talks about, where we get When we engage into a level, we get opposing candles and then a close through. That's your actionable signature for a continuation. So then you can trust trading away from these failure swings essentially, right? But what if we do, take out the consolidation low? This is always ideal. This is perfect because we know that the market can't, um, reverse from this consolidation. So when we actually manipulate, right, you may think that's reversing, but we know it's manipulation, right? Because of price can't reverse, right? So this is perfect, right? Where we take out a consolidation low, we can target the low resistance highs. And this right here is a model in itself, right? So higher time frame consolidation, how to identify on the higher time frame? It's going to be inside bars, right? Obviously, it can look like this. We can have really large random consolidations on the daily chart. But if you ever see a candle that is inside barring, meaning after this candle closes, the next candle doesn't take out the previous day's high or low. Whenever you see that, an inside bar, that's just a lower time frame consolidation. The way we want to trade that is, again, ideally we want to see price take out that consolidation low, which on lower time frame, these are swing points on lower time frame, right? This would be the manipulation and expanding for a continuation, right? So retracements, what's a retracement signature? Right, price will expand into an objective. This is the objective to the left. And at the point of retracement, we do not create any sort of protected swing, right? It's just leaving failure swings. And often you're going to see price create these really deep pullbacks, right? Every time it takes out a low, it creates these really deep pullbacks, which is generating low resistance liquidity, right? So whenever you see this and price hits like a fair value gap, this is how you know that this internal range to external range is more likely to play out, because at the point of retracement, right, there's this low resistance, right? We're not trading away from any high resistance, right? This is what we want to target. So how do we trade from internal to external? Well, ideally always within any phase, we want to see a protected swing print, right? We want to see some sort of manipulation. So whether we manipulate this low into the gap, or then on the lower time frame, we create some sort of low resistance to trade away from, right? This is what we want to see. We always want to trade away from high resistance, right, or manipulation to then begin expansion, right? So once we get that manipulation, we just compare that with the CST for confirmation. Also an SMT, of course. So what about, how do you trade a retracement from, the high of the range to back within the range? We demand manipulation. This is something you see me do a lot. It's something I talk about a lot, is if price expands and then you want to trade back into the range, because maybe on a TGIF or something, you want to trade back into the weekly range or whatever, you need to trade away from manipulation, right? So we trade expansion back in the range, because if you have no manipulation, you're trading retracement, which you don't want to do, because we don't want to trade away from failure swings. So you require manipulation, so we trade expansion back in the range. And just because we have this manipulation here doesn't mean we're going to go to the range low. That doesn't mean that this range can still hold. So that's another misconception that a lot of people have. So what is a higher time frame signature for expansion? I also want to mention something else. Um, for consolidation, we can expect a new phase of price, of course, after 3 consecutive days of expansion, especially if we hit an objective, okay? So I wanted to mention that as well, because it's the same thing for retracement. After you get 3 consecutive expansion candles in the same direction, we can expect that new phase of price. Now, what does that look like? Well, price is going to leave stacked previous day's highs essentially, which this is what it's going to look like on the hourly or 4-hour time frame. It's going to be these low resistance highs behind, right? So on lower time frame, this is what you're going to see. It's just low resistance, right? There's no candle 2 or reversal at the point of retracement, which is good if you want to see continuation. So how do you trade from a key level, right? So just retracement into a fair value gap and expansion. You wait for a swing formation, right? A candle 2 closure. That's the reversal signature to then continue that expansion away from that fair value gap. So what is a reversal signature? It's essentially where price expands into an objective, right? Hits that reversal point, expands away. So it's simply expansion, reversal, expansion, or expansion met with expansion. That's what it's going to look like. Often going to look like a V shape, right? Or like a BPR, balanced price range, where you have a fair value gap on both sides. This is something you really want to see. On the lower time frame, it can be on any time frame really. Something you really want to see. and then you confirm it with the CSD, obviously, and we want to pair it with an SMT. So what would that look like, right? Let's say this is your reversal point right here, the swing low. Price expands into it. You want to see immediate expansion away, right? Creating that V shape confirmed by that CSD, also pairing with the SMT ideally. But what happens if you trade into a high and we don't get this signature? That's still fine. There's still an opportunity to trade this, right? Because when price expands to objective but consolidates, right? So that's a continuous signature, meaning that we know we can't trade it away from the consolidation high. So what we are demanding is a AMD manipulation, like which is a reversal, right? So expansion, consolidation, manipulation, and distribution away. So when we trade into this consolidation high, this is when you want to see that signature, right? So expansion into consolidation high, expansion away. This is still right valid, right? Because this consolidation here, when we hit this high, it's just going to be like a higher time frame candle 1, right? And this manipulation can be a higher time candle 2, if that makes sense, right? So if I go back to over here, right, this is called AMD continuation, where we trade into a high, we consolidate, we manipulate the range low and continue. This is AMD reversal, where we trade into a reversal point. We don't initially reverse, we consolidate. So we manipulate and could expand, right? And this is obviously the higher time frame signature for reversal. It's just a swing formation, right? Pretty simple. So to put it all together, it's essentially like a market maker model, right? A higher time frame retracement is a lower time frame, lower resistance liquidity. This is where you're going to see the accumulation phases, right? So we trade away from reversal points being models, so like internal to external, right? Here's the higher time frame key level. This candle here is viewed as the smart money reversal or the reversal, right? Where on a lower time frame within this candle 2, you need to see a reversal signature, right? We don't pattern trade candle 2 closures. So if you ever look inside of a candle closure, and I've talked about this a couple times, and you don't see a reversal signature, that's your pattern trading a candle 2, and it's not going to hold generally. So you need to see these two things align, right? Because obviously a candle 2 closure is a reversal signature, but within that, you need to see some sort of reversal signature, right? And ideally, we pair that with an SMT, right? And once we expand away from the reversal signature, we're obviously trading expansion candles away from that. And within that, we want to see continuation signatures, right? We want to see shallow retracements on our way to the draw on liquidity. We want to see consolidations, shallow retracements, rejecting lows, opposing candles supporting price, fair value gap supporting price, etc., right? So now going into some more basic stuff. Now we're on to swing points. This is going to be like super basic, but we're going to put it all together. So let me just make sure we're good here. Like, are we good here? Yes, we are. Okay. All right, so now we're on to swing formations, right? This is a candle 2 swing formation where candle 2 is just the candle that fails to displace within candle 1's range. So this gives us insight that a reversal has been put in. Then we can trade candle 3, right? So if you get a valid candle 3 closure, which just means you close a body above candle 1's reversal candle, or sorry, body or high, right? Just a strong close in general, which creates a swing point. Then we can trade candle 4 expansion, which is something that T-Trades just made a video on actually on YouTube. It's also in his course, of course. So in his course, of course. But yeah, to trade candle 4, you need a valid candle 3 closure. And to trade a candle 3, you need a valid candle 2 closure. So what if you don't have a valid candle 2 closure? Well, you need to see a valid candle 3 closure to then again trade a candle 4, right? So at this point, you don't know if there's a swing point until we get a valid candle 3. Now this is specific to for me, the GXT model is specific to the 1 hour and the 30-minute, right? Because we trade the fractal model, but I don't require this on the 4-hour chart or the daily. You guys know that. But that's because we are seeing a lower time frame reversal that will be put in within this candle. Because with the 4-hour candles, we obviously trade. We also confirm like those candles and reversals with 1 hour and 30-minute models, right? And you would just simply confirm, if this is a daily chart and you don't reverse this day, you would simply confirm a reversal with the daily profile this day. So you can still trade it. But it's a bit different. But so candle 2 reversal. So we just went over, obviously, candle 2 close swing formation. This is a candle 3 close swing formation. Now we're in candle 2 reversal into expansion, as you see highlighted up here. So this is when candle 2 hits a key level but doesn't reverse. So this is when we can anticipate reversal off of candle 1's low, ideally. And the signature for this is when we have a small wick, right? Price can reverse into expansion, right? We can expand because of the small wick, right? Also, candle 1 doesn't have to hit a key level. Like this candle 2 sweep can be hitting a key level as well, but majority of the time it's when candle 1 hits a key level, right? And of course, you can trade candle 3 and 4 after that as well. So now we're going to introduce models. So this is the 3 frameworks that we use every single day on all time frames. So like the daily, the 4-hour, and the 1-hour, right? So internal, internal being the reversal point, external being the target, external to internal, external being the reversal point, internal range being the targets, and order pairing ranges or just manipulation and distribution to like low resistance liquidity. It is a swing point or a range low as the reversal point, and the opposing side of the range or failure swings or a swing high as the targets, right? And here is the 3 different types of swing formations, right? So here you have the valid candle 3 closure swing formation. Here you have the candle 2 swing formation, and here you have the candle 2 reversal swing formation. And this is what we're highlighting here, right? Here we're numbering that, right? You have a valid candle 3 because we close a body above this candle's high. Here you have a candle 2 swing formation because we close back within candle 1's range. And here you have candle 1 hitting the swing low but not reversing. So it closed an expansion candle. So this candle is opening near candle 1's low. So we ideally want to see that swept out, right? A small wick supports an expansion, right? So now we want to be trading expansion candles within swing points, right? So this is a mechanical way to do it, is measuring out the EQ of ranges. So within a candle 2 with a large wick, you're simply going to mark out the high to low, that whole wick's range. And you want to see that candle 3's low formed within the lower half of this wick's range, right? Because that essentially is just forcing a small wick, right? Because if you go ahead and disrespect the EQ of this range, now you're starting to form a larger wick, which doesn't really support expansion, right? So it's a mechanical way of identifying small opposing runs. That's the only thing this is for, right? So when you get a valid candle 3 closure, you have a candle that closes near its own high, its own range. You're going to mark out EQ of that range, right? And you want candle 4 to form its low within the upper half of that previous candle's range, right? Which forces that small opposing run, right? So pretty simple stuff, right? So now putting it all together, you have a swing point and a close. So you're marking out EQ of that range. This is your invalidation point for candle 4. And we expect the swing formation to expand towards our target, right? Away from the internal range liquidity, which is the reversal point. Over here, you see the same thing, but we're marking out the EQ of the wick. Over here, it's a reversal into expansion candle. The same thing. They're both expansion candles. They're just a bit different, right? Because it's a reversal into expansion, but it's still an expansion candle. So you mark out EQ of the whole candle's range here. And you want to see price respect the upper half. So now we're going to be talking about open, high, low, close, how these candles generally form. So this is fractal, so on any time frame. We want to see, ideally, for a bullish day, we want it to open low first, creating that small wick and expand away, closing near the high. Ideally, this is very specific to like 4-hour candles or 1-hour or 30-minute candles. You want the low to form pretty early on in the candle, right? You wouldn't want within a 30-minute candle. You don't want this wick to form, within 20 minutes. That for only 10 minutes for price to expand. So it's like really specific within like hourly candles and 30-minute candles and stuff like that. You generally want them to form like pretty early on, ideally before the first half of the whole candle, ideally, right? But for daily, price can reverse in like New York and stuff like that. So it's not totally. We're more so focused on like around drivers and stuff like that. If price is going to be a New York reversal, we want it to be around those drivers, right? But yeah, ideally we want it to open low first. For a bearish candle, we want to open high first, right? Create that small wick and then expand low. So what about for candle 2 reversal into expansion? It's the same thing. It's still an expansion candle, so we want it to open low first, have that small wick reversing off of candle 1's low, and yeah, expand away and close into high ideally, right? And within these expansion candles, what do we want to see? We want to see expansion signatures, right? Small opposing runs, opposing candles supporting price, which actually makes up for the body of the expansion candle. So what about a reversal candle? This is very specific, right? We don't trade reversal candles that open high first and then low and then high. We trade reversal candles that open low first, right? And leave these session highs behind so price can expand back into the open. Now we can trade these days, but we know one thing about this day is that it doesn't support expansion. So you need to adjust your targets very simply, right? So you can adjust your target back to the daily open, or maybe there's a swing point high over here just past the opening price. We're more so just adjusting our targets with a day like this, but it's generally the same thing. Um, it just has to form a certain way, right? If this candle opened high first and then low, we wouldn't be trading seek and destroy, right? Because that would just be seek and destroy where price is opening high and then low and then high again. Right? We don't want to trade that. We want to trade a fluid motion, a price opening low, hitting a reversal point and expanding away from that, right? So it's very logical. So how to implement this all together, like phase the price, um, continuation, and then open high low close, all that stuff, right? So what if you're trying to trade a continuation, right, where we have a valid candle close and you want to trade continuation, so you're going to mark out EQ of that candle's range. So within the upper half of this candle's range, you're going to have an invalidation point majority of the time. So within an expansion candle, right, when price expands, what does it do? It leaves behind fair value gaps, right, which make up the expansion. So you want to see these respected, right, especially if they reside around the opening price of the new candle, right? So this is very specific to expansion candles, how the phase of price we want to see, right? Because if we expand and we want to see another expansion candle, then what do we want to see? We want to see continuation signatures, right? So retracement and consolidation. When will this occur? Within sessions. So Asia, London consolidation or retracement, or a London reversal, or a New York reversal, right? So when you think about a bullish candle, we also want it to open low. So price would be opening low first, creating a small wick, right, into a fair value gap, right? And we're also retracing. So you see how these all come together here? Then this would be like the 4-hour chart where we have candle 1 hitting the key level and then candle 2 reversing. So you can imagine, let's say this is Asia session, right? London session hits this key level, reversing off Asia lows. And we're just trading a 4-hour expansion candle away from that. So you see how we're just putting all this together into one model. This is how you actually frame high probability trades, right? So when we go back to reversal candle with an IRL, ERL, this was an expansion candle framed from IRL, ERL. It's the same thing where we open low and maybe we reach EQ of a range or a fair value gap that's deeper in discount or whatnot. You can still trade this, right? Because the candle opens low as long as you have the reversal candle profile, right? Where it opens low first, the reversal is formed prior to 10 a.m. ideally. Hold on, let me make sure I'm good here. I think so. Am I frozen? No. As long as, right, we open low first, we put in that reversal prior to 10 a.m. We can trade this, but we know that we're not going to expand past the open, right? We know we're probably going to close back within the range, creating that reversal candle, right? So you just need to adjust your target, and your target would be the external range high, right? Does that make sense? So how to trade a candle to expansion candle, right? Within an ERL to IRL. This is going to be a reversal / retracement. So this is when the previous candle expands, right? And you sweep out candle 1's low, create that small wick. Within this candle, the previous candle, there's going to be a fair value gap to target, right? So it's either you sweep up the previous low as the external range point where you're manipulating and you're expanding back in the range, or maybe way to the left, you're just targeting or you're trading into an external range within a reversal into expansion candle. Now I can't draw that here because I don't have enough space to do that with Figma. So I'm referring to the previous day's low as the external range point, right? And this would essentially be like if this candle here, let's say, trade into a fair value gap or whatnot, this is how you would trade the reversal day, right? Is you would reverse off of this candle once low. You can begin to target stuff like this external range high and then just back within that range, right? Within this candle's range. So how to trade external range to internal range within a reversal candle. This is specific, right? Because price will create that small wick, which you want to see. Because again, we don't want to see a large wick because that would be price opening high first. So we want to see price open low first. So generally it's going to expand lower, which then creates a fair value gap. So we know price can't expand past the daily open. So we're picking targets either a little bit past the daily open or around the daily open or within the previous candle's range. So as you see, this fair value gap is created within its own range. So we're just targeting back within the daily range, right? Because we know the daily candle is going to close somewhat like this. So this is when, again, we either trade into an external range low or within its own range, we create a swing point to manipulate to trade back within the range to internal range liquidity, if that makes sense. So how to trade an expansion candle, a continuation, right, within order paying ranges. So this is when the previous day, within the previous day's range, within the upper half of that, there's a swing point to reverse off of. This is also can happen within the current day's range. So maybe Asia session lows, right, to reverse off of. Either way, reversing the daily candle from order paying ranges, which is our models, right? If you think about what we're actually doing here, we're reversing the daily candles, highs and lows from models. So internal range to external range to internal range in order paying ranges or some sort of manipulation. So this is what it would look like, right? Where the daily opens low, respecting the upper half of this previous candle's range, forming a small wick, supporting expansion away from manipulation, right? We're using that model, right, which is just a reversal point to form the wick of the day, right? That forms the wick of the day, which is manipulation, which is a protected swing to then expand away, which creates the body, right? Then we can target the session highs, right? Or the opposing side of the range. Now, this is exactly my GXT model, or sorry, my GXT ideal profile, where the high and low of the day is formed from manipulation, which forms a protected swing intra candle to trade away from, right? That manipulation, that protected swing forms the actual wick of the day. And obviously, after manipulating, you expand, which would form the body, right? And ideally, you have a small wick, right? Because you need a small wick to support expansion, and you need expansion away from manipulation. So all these things kind of coincide together, right? And then we are obviously pairing a manipulation with an SMT, right? Because SMT is a filter for stop raids or manipulation, right? That's what actually is a high probable manipulation. And we can pair that with a driver as well. So I'm getting a little bit off topic here, but just wanted to add that in there. So yeah, this is a continuation with this model, right? So what about a manipulation order pairing ranges within a C2 reversal candle? This is when we simply reverse out the previous day's high, which is a lower time frame swing point, right? Or even if it doesn't reverse from here, it will simply be maybe a consolidation, right? When we hit this high, we already talked about this, or maybe price expands into the previous high but consolidates. Then we can reverse off that consolidation's high, which is the same thing, right? We're just framing a reversal from some sort of manipulation to then expand into like the opposing side of the range or failure swings, right? So all this is a candle 2 reversal, right? We're reversing off that previous candle's high with a small wick, right? And ideally this candle is opening high first, which supports that bearish move. And then we're trading expansion candles away from the high of day. So how to trade a reversal candle within this framework, order pairing ranges. So again, it's going to open low first. And then this is always the ideal scenario when you're trading this profile, this candle profile, is we're trading away from manipulation, right? A protected swing, because you always want to be trading away from a protected swing. So a day like this where it's already a little bit lower probability because of the wick size doesn't support expansion higher. When you have this manipulation trade away from, that supports expansion back into the range, which is good, right? So you're going to be targeting the opposing side of the range, which this is probably going to be like London highs, right? which is the opposing side of this range, is also session highs. So it's back within the daily range. Or you're obviously going to target the failure swings that are always going to be there when you're trading a reversal candle, because this is going to be Asia session highs and lows, right? So either or, you're trading back with here or here, right? And that is it. So that's the framework and kind of how to put it all together. So next stream, we're going to be going over essentially how to frame daily profiles and weekly profiles within these models, right? So how to pair a driver or a New York reversal with this profile, etc. So we're going to be going over this framework, but we're adding, like signatures of profiles and how to filter it out, how to see invalidations, etc., etc. Right? So next stream is going to be more so about profiles, how to pair narrative with drivers, and then the next one is going to talk about, my next stream will be talking about entries. So how to filter out certain entries, right? Which is going to be, it's going to get a little advanced, right? Because we're going to talk about how to trade a candle 2. We're going to be talking about how to do positional entries, but also the fractal model, like picking the right opposing candles, right? How to ideally trading a continuation signature, how to trade, or what to avoid, etc. Right? Like all these things. But yeah, this is like the really simple stuff. This is stuff we probably already know, but maybe you guys know how to put it together now, right? So think about models, right? They're just forming the low and high of the day, right? And they're forming at specific times, and this is how we react, right? So if you just go into some examples, where am I at? Okay, sorry, I gotta like exit out of here. Let's go to like gold, right? We'll see this exact same thing. Now, it's a bit different with a day like this because when you mark out EQ of this range, we're already opening up within the EQ of it. So this is simply when you disregard this and you just simply require a small opposing run. That's it, right? It's simple as that. But when I look at the EQ or just within this daily range, ask yourself, is there anything for price to form the high and low of the day from? Are we opening up near any key level, any model, right? So this is perfect. What do I see? A swing point high. This is the perfect reversal point, right? We think about phases of price. Now look at us putting this all together, right? We're expanding. So what are we doing? Price consolidated, expanded, consolidated, then we manipulate this range high. We expanded away from it, and now we're consolidating after expansion, right? Which is a continuation signature, right? You're seeing a continuation signature on the stronger asset. That means that this asset is just lagging, right? So obviously you see this asset's way weaker, but since the stronger asset is putting a continuation signature in, this is how we know that it's going to be following silver, right? But it's going to be lagging behind. So what we do is we pair, right? What would this be, right? This would be order pairing ranges, right? We're manipulating the range high and targeting the range low, which forms the high of the day, right? If you guys have seen my delayed protraction profile, if you guys watch my video, this is literally exactly how I said it would form. It's going to open low first. It's going to expand back and create a new wick. There's a couple requirements. There has to be SMT. There will always be SMT here. And there will always be a small wick, right? Now we can pair drivers. So we obviously have NFP on Friday. So if you manipulate prior to a driver, what should that driver do? I've said this a gazillion times. The driver will expand away. So when you see that, this literally confirms a narrative when the driver starts to expand away. What are we seeing on the lower time from here? Expansion into the reversal point, expansion away. I mean, is this literally not the thing I just showed you? Reversal, V-shape, expansion, reversal, expansion. What are we seeing right here? Reversal or expansion, reversal, expansion. We're literally seeing that, right? We're seeing the higher time frame close that represents a reversal. So if I go back to here, what are we seeing? We're seeing that exactly, right? We're also pairing this with an SMT and a change in state delivery. So you also have that. You have the SMT, you have the change in state delivery. Okay, cool, right? What are we seeing within this expansion? We're seeing shallow retracements. We're seeing consolidations. Do you see this? These shallow retracements? I mean, am I making this up? No, I'm like, this is actually like what the market does, right? Um, and if you look here, intracandle manipulation, the high of the day foreign from manipulation, right, with SMT, paired with the driver, whether you pair the manipulation with the driver or the continuation away, right? Either or, that's confirming or pairing a driver with the actual manipulation, right? Also, what else, right? Let's go over here. Let's go back to this. It would be this version. Let me find it. It would be this, right? We're trading an expansion candle, a continuation. So when you look at the previous day, it's not really an expansion candle necessarily because it does close back within its range. But this is why I don't pattern trade. So let me go over something else as well. I know someone asked me in the lens, which is fine. Why do you not see this as an internal to external range move, right? Because, yeah, I mean, maybe that can make sense, right? We have a candle to closure. We have all these fair value gaps getting respected. But why are we disregarding this? Well, it's not really because of the CSD. Like that, obviously we have a CSD, but it's phases of price. I'm telling you, this confirms everything, right? So if this is going to be a true reversal, what do we need to see within this wick? We need to see a reversal signature, right? Expansion, with expansion ideally, but we see consolidation, right? This is exactly what we see. So that is a continuation signature, right? We talked about how do we trade consolidations? Ideally, we manipulate the range high. So if you go back to here, actually, let's first just go over this, right? Whoops. So if you look within the previous candle's range, what are we opening within? That swing point high, right? So this becomes your invalidation point, which is what we're going to talk about in next stream. That's a part of profiling, is identifying invalidations that happen with the previous day, but also within the current day. Because you're going to get invalidations within the current day, not only reversal invalidations, but also continuation invalidations. So here we have, within the previous day, we print this potential reversal point, which would be your invalidation rate. If you don't manipulate this, there's nothing else to manipulate. When you think about relevant swings, the space between this high and high makes it a relevant swing. So when you manipulate this high, there's no reason to return back to this area, meaning you're going to get ideally that phase of price, right, where we actually manipulate. It's more significant when you manipulate a relevant swing. So yeah, this is literally, whoops, this exactly what you see, except we don't open low first, right? We open high. We open low first, but it's a bearish day. So obviously with a bullish day, you want to open low first, but when you're a bearish day, you want to open high first. But I've already showed you guys the exact and mechanical way you can identify this being a reversal, a type of New York reversal, right, where the daily actually opens low first. And I have a video on this. It's in my channel, so go watch that. It's a profile that I use, so you need to know it. It's just a form of New York reversal. When we think about a standard New York reversal, any candle, so let's just say it's a bearish candle, ideally we open high first, which then creates session highs and lows, or session lows in this case. So this opposing run is creating the wick, and then we expand through the session lows, right? The small wick supports expansion lower and stuff, but this is a bit different where we actually expand lower. We're creating a large opposing run, which is eliminating, it's more so eliminating the possibility for a bullish expansion candle already, but we reverse off of the session highs. Now, why wouldn't we want to see a reversal off these session highs? Because it's a failure swing to this high. So this is why we don't frame reversal off failure swings. We want the relevant swing to get manipulated, right? Because then there's no reason to return back here. If we saw something like this prior to NFP, it wouldn't be as interesting. If we saw this prior to NFP, I wouldn't trust it as much. Why? Because these are now failure swings. There'd be failure swings here, right? So NFP could easily just come back up here. There'd be a reason to return here. But since we clear all relevant swings, there's absolutely no reason to return here. So, and we haven't yet expanded. This is something I've talked about as well. If you haven't yet expanded away from manipulation, then you expect a news event to just expand, because after manipulation, what do? We expand. So if you haven't yet expanded, then we shouldn't consolidate, or we shouldn't retrace. So you see how phases of price are coming in not only within the daily delivery here, but also just intraday in price anticipation, pairing that with the news event and stuff like that. So it's a little advanced, but yeah, this is a very clean day. I would definitely journal this day. Here we have all these lows, right? And I can expect a very large range day here with NFP, right? And this is one of those trades where you really don't want to miss. If you're a newer trader, you definitely want to journal this and recognize this for next time this happens. But these are days that we wait for, man. These are days that you want to hold these runners. You don't want to be, partialing early. You don't want to be taking TPs early because on these high probable days, this is when we want to hold trades, right, to our objectives. I mean, at least to the previous day's low, right? You don't want to be just holding at 2R. You're doing yourself a disservice, right? Because it's too aligned for you not to do that, right? You want to be holding these trades because this is what actually can really, save your account or maybe take you at a drawdown or just spike your equity curve, right? But we'll probably get to questions now. Unless you guys want to go over, what time is it? We got like 19 minutes. What am I doing? Where's Discord at? That's way over here. I'll go over questions now. Unless you guys want me to go over like more trades this week. But let's see here. Okay. Silver Monday. When does this get uploaded? So I don't have any control of when it's uploaded because T-Trades actually uploads the videos. So that's like on him, right? So we just send in the recording and T-Trades uploads it to WAP. So I don't really know. It takes like a day or two usually, it seems like. Yeah, exactly. This slide is from MXM. That phases the price slide. Yep. Am I uploading these PDFs? No. I mean, maybe I could share. Maybe I could upload it to like a Google Docs and share it with you guys potentially. No, it's not a remake of the GXT course. It's just trying to like go over my whole approach essentially, and even covering like the more advanced stuff and how to put it all together. So it is a part of the course though, right? Like the streams are a part of the course, essentially. For the swing point slide, would it be wrong to identify the first swing as a candle 2? Yeah, that's what it is, right? So, hold on, let me fix this. This is like out of ordered. What the heck did I just do, bro? Whatever. Okay, how do I fix this, guys? What the hell? Okay. If we go all the way back to swing points, this is a candle 2 close swing point, right? The first one is that. Yeah, kind of like this. This live stream is going over like kind of like the core concepts we used. It's the foundation to our trading, right? Phase of price, swing formations, open eye look close, and profiling, etc. And how to put it all together, really. So you see these slides. We're more so putting these all together, right? Right over here. It's a very repeatable approach. When trading, or when C1 trades into a PD array, are you trading C2 after the manipulation of yes, or you'll wait for T2 closure? So on the 4-hour and the 1-hour, we trade candle 2s, right? But not on the 1 hour or 30 minutes. We trade the fractal model now. I will teach you guys how I do trade candle 2 closers. It's more of the same thing, but it requires a specific framework on the daily profile. But we'll get into that. On this example, you'd still wait for C3, even though no, like this can be like the 4-hour time frame. If this is the 1-hour time frame, then yes. If it's a 4-hour time frame, then you can trade it, right? Let's say this is like Asia session, so like maybe the daily opens low in Asia, and then London session, or this can be like London session where we don't reverse, but then we're looking for a 6 a.m. New York reversal. on the 4-hour time frame, then you can trade it, right? So I probably should have labeled these, but I was gonna do that actually next slide. So, or my next stream, talking about profiling. Every single one of us here is absorbing the knowledge. Hell yeah. Man, y'all haven't seen nothing, man. Like, seriously, I could teach you guys a lot more. But obviously, you don't need everything. A lot of it comes with experience and stuff. That hurt. Is your stream recorded? Yes. Oh, welcome. So you're going to find it in WAP later on. It's going to be uploaded. SMT with, yes, so silver. Yeah, so I'm watching two assets, so two correlated markets. And these are the if you guys want to know my my correlations, it's going to be this. So for gold, you're going to be looking at silver and XAU euro. For CL or oil, you're going to be looking at RB. For indices, I know AM and T do not use YM, but I do it. There's a very specific reason. I use NQ, ES, and YM, right? But when YM is not correlated between these two assets, you're going to refer to RTY. If you want to trade RTY as an individual asset, just like you would be doing if YM wasn't correlated to NQ or ES, you would just use YM, right? So I kind of view these two as correlated and these two as correlated, but when they are correlated, when YM is correlated to NQ and ES, you can still use any of these three as a correct correlation. And there's, again, like this, Kraken correlation or correlated markets, that's like a whole nother stream and slideshow in itself, like that we could do. And it's one of the most important and misunderstood, I guess, concepts or something. I don't know what to call it. But it's one of the most powerful and probably one of the most confusing as well. You guys hear me talk about a lot about lagging assets and blah, 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 2-6 SMTs and all this stuff. Very important in my trading, but pretty advanced. But yeah, by the way, I never use RTY SMT with NQES, so that's only going to be YM, by the way. So how are you going to know when price is going to consolidate if price already had the idea that it can go from internal to external? That's basically saying that if we try to trade it, we are essentially screwed before we realize it. Yeah, so like when you hit a key level, you're simply going to be waiting for reversal signature. So it's like you're just waiting for what phase of price is going to happen, right? And if you don't get a reversal signature, then what are you going to get? Probably a retracement or consolidation. So it's as simple as that. Does that make sense? Do you have any backtests? Yeah, I do. I have like two. We do that. We do backtest every couple of weeks, like every other week or something. Just go on WAP, you'll find it. Drivers for Forex. When there's no news, there is no driver. So it's just going to be like maybe London Open. I don't know, to be honest. But it's not going to be the same. Generally, it's really not. You're going to refer to drivers, red folder news events. And by the way, a lot of people don't know this, but 8:30 is absolutely useless when there's no red folder. And 9:30 is only applicable to indices. We're not using 9:30 with gold or oil or anything else. So a lot of people don't know that. Can we trade C2 on the 4-hour if it's the candle that hits the key level if the wick is small? Yeah, so we can trade that, right? So if candle 1 on the 4-hour hits a key level, then we can trade a candle 2 reversal expansion on the 4-hour. Sometimes you took the trade from the first CST. So that's a positional entry. So that's what we're going to be going over on not my next slide, but my next slide. It's going to be more so entry focused. It's a bit more advanced. It just requires a specific framework because it's a riskier, right? So you need the framework to make up for it. Is it possible to leave the Discord chat on the right? Recording, so we see questions in the chat as well. Oh, you guys can't see. Wait, what? Also to leave the Discord chat on the right. Oh, like at all times? I don't know, to be honest. I'd appreciate it if you could upload these slides. Okay, cool. Y'all, I'll try to figure that out. Not that slide when it comes to these swing points. Oh, whoops. How do you decide when you trade the 6 a.m. candle and trade around the 9:30? So it's just essentially like if I'm gonna trade the 6 a.m. candle, it's either going to be two things. It's going to be New York reversal or New York continuation. So if price hits a relevant points before the 6 a.m. candle, then we could be trading a continuation, right? If there's an established high of day. Now the way we confirm that is with drivers. So we'll always see drivers expanding away from the high and low of the day when they're put in prior to a driver. So we're pairing our 6 a.m. entries with drivers always, because that it does two things. First off, you can pair it with the entries, which is always great. You have that volatility, but also it confirms narrative. Like drivers confirm narrative every single day, and it happened a lot this week. Like this week, I traded every single day, but all the trades were actually 10 a.m. candles. So if you guys are newer, you guys don't know how to operate around the drivers and stuff like that, which we will go over like way more in depth. But I already went over it a couple times, but we're gonna be more like slides that you guys can refer to and stuff like that, more detailed explanation, whatever. You guys can just use the 10 a.m. candle for now. It's gonna be like the majority of the time, anyways. It's always gonna be continuation generally, because you don't really want a 10 a.m. reversal, because that means that the drivers fail to reverse, which is not something you want to see, ideally. So generally, it's always continuation, because you have the previous two sessions and the drivers prior to the 10 a.m. candle. So generally, there's going to be a higher low day already established. So then it's about trading continuation, right? Away from that low day, as long as there is objectives to hit. Volleyball tournament. Oh, now you're cooked. Will you ever do like a live trading session or record full sessions of trading? So yeah, so there's a thing, like I don't know how Nico does it. I've never been in a stream. There's two reasons why I don't know if I want to do that. Because first off, I don't get paid to do that. That's one thing. So like I'm just not gonna do that just because that reasons. But another reason is because you see AM and AM&T don't do that. It's because they don't want to, like it's just structured. The lens is like structured that way, where we want to ideally just not do like signals or that type of way or something. I don't know. If I had my own membership, I definitely would live trade and stuff. But again, not in my contract to do. Also, I like to focus on my own trading. But yeah, I mean, if I had my own membership, I would do it because it's definitely valuable. I can see how it's valuable. Maybe like one day or whatever, but yeah, there's like some legality, or I can't even say the fucking word, but like you have to like remove, like I can't live trade, I can't show the trade or something. T told me about it because I was gonna do it one day, and then he said it couldn't show the P&L or whatever, the trade, and I couldn't show where I was entering. I was like, what? That's just stupid. So it just all seems like stupid, but yeah. Would love a stream on correlation. Yeah, we'll get to that. Multi-stage SMT is where it is on KQ. Yeah, we'll go over that stuff. Multi-stage SMT as well. I'd also like to know this. There's a short on YM where he entered 9:30 versus waiting for 9. Yeah, so I will trade within the 6 AM candle, but the 6 AM candle has to support expansion rate. Silly question, but can you show your whole watch list? Greg told me to trade 1,000 pairs. What the fuck? Yeah, sorry, it's just right here. It's just indices, gold, and oil. That's it. What the difference between GXT for our profiling from teacher fact model is just that profiling doesn't wait for 4 hours, but as long as there's 1 hour 30 minutes CST. No, you don't need a CST. No, you don't need any CST. You only need the CST within the fractal model. So that's what also separates my model from like AM trades or something. You don't need an hourly CST, you don't need a 30-minute CST, you don't need a 15-minute CST. None of that. GXT is like a mechanical way of defining high probability fractal models, essentially. It's a framework almost, right? We're aligning expansion candles in the same direction. And the profiles, in a sense, as well, can make it mechanical. And like when to time entries, right? As if a 4-hour candle doesn't support expansion, then you mechanically wait for 10 a.m. to open. So that's giving you a time window to mechanically look for trades, right? So it's different from the fractal model, but not really. Like obviously the entry is the same process, but as far as like going about with like profiling and bias or whatever, like I do things a bit differently. If you look at AM trades and T trades, uh, you know, course on like profiling, it's a bit different, right? I specifically focus on profiling because I can trade I can't trade every day, obviously, but when the framework is there, I will trade it because I will trade a 1-hour or 4-hour model, right? That is supported by the daily candle. So I don't need a higher time frame closure like maybe T trades requires or whatever. Like I don't need all this framework on the higher time frame necessarily. But yeah, I just get deeper into profiling, which makes up for it. And I have all these like different type of filters, right? With not fading a 4-hour candle, which helps you avoid low probability conditions, and all these other ways I view invalidation stuff, which we'll get into. But yeah, what times will you start looking for trades? There's 8:30 news, and when there's not 8:30 news. Okay, so let's go over indices first. So when there's no news prior to there's no 8:30 news, then I'm going to always refer to 9:30 generally, because that confirms a continuation if there's a higher low established. Now, if there is no higher low established, then I want the driver to create it. Then I will trade 10 a.m. continuation. But I can also pair my entry with 9:30, so I'm going to wait for 9:30 generally, right? But if there is 8:30 news, I'm also going to either pair my entry with 8:30 news, or I'm going to wait for 9:30, right? Because 8:30 can manipulate, etc. For gold and oil, I'm going to wait for 8 a.m. Any profiles usable in London session, or is it more like a New York? Wait, any profiles usable for London, or is it more? Oh no, yeah, we're gonna go over London session signatures and stuff. It's very repeatable as well. So all London traders, next stream is gonna be dope for you guys. Like you're gonna have a mechanical way of viewing this stuff. Like to be sick. Okay, so what time are we at? We're almost at an hour. Hi guys, see sometimes there are days when today's big distribution is coming out in 4 hours of 6 a.m. and sometimes 4-hour candles 10 a.m. and like of the 6 a.m. candle, I missed a day because I can't understand how they trade the candle. After all 9:30 there is a market opening and there is very difficult to identify if you are tuning for a direction or certainly present movement that will burn to in any case. So how do you usually manage to trade the candle of 6 a.m. model? So again, this is more so intraday focus. So this is literally next stream. Like we're going to get in depth. So we're going to save that. We're going to go over that next stream. Sometimes traders do not create SMT. How do you? Well, they don't have to create SMT. They don't have to create the high of day, low of day. They can expand away. So if there already is a higher low of day, then it should just expand away. So there's no manipulation that is required, right? Because if manipulation is already acquired, or if manipulation already happened, like that we see like in this example, manipulation has already occurred prior to the driver, then the driver should just expand away. So it's a simple if-then statement, right? If we have already put in a high of day prior to the driver should just expand away. Now there's a couple of different things on how you can even anticipate the driver to expand or make an opposing run. And that is when we have actually expanded away from the high of the day, right, already. Then you can expect more of some sort of retracement and then close through because we've expanded. So we can, retrace. But if we haven't expanded away from manipulation, then there's no reason to retrace, right? Or consolidate. It should just expand. So that's what we see here, right? So there's like a little bit of details, but if we haven't, let's say, hit a key level or reverse price, or let's say we hit a key level but we didn't reverse, the driver didn't expand away or whatever, you need the driver to reverse, right? You need the driver to like actually hit a key level and actually reverse the day. Because if it doesn't, that's like invalidation. And again, we're going to talk about that stuff. Does it have to form higher low of the day to be valid daily profile? Or is it trading away from a key level enough? So yeah, trading away from a key level is enough. Like when you're trading, away from something, that key level doesn't have to form the higher low of the day. You can just be trading away from continuation away from the higher low of the day. So I'm going to show you an example of that. Like here, right? So this just means that this here, this idea is just you're trading from the high and low of day, like an established high and low of day. Now, why am I trading this, away from the high of day? Why am I still trading it? The daily range is huge, right? Why are you trading this? Well, it's very logical because it's a simple if-then statement. Again, like all my trades are if-then statements. They're reactionary. I don't predict anything. Like I literally come today and I see how the daily profile is printing and I react to it. And drivers are going to tell you always what's going to happen generally in just the previous sessions, right? So here it could make sense for sure to come back within this range, right? That makes sense because we've already expanded prior. We're coming off of like a huge displacement range, so we could definitely come back in the range. But what would the drivers need to do, right? When would we come back within the range? It would be around drivers, right? So when we see NFP not displace away from this low, and we see 930 also not displace away from low, well, that's very telling because now that we are not going to go higher because if the drivers, the important times of the day can't displace higher, then we don't expect like noon or like PM session to do it. So at this point, I now focus on this model for continuation, right? Internal to external. I either know that we're going to continue bearish or consolidate. We're not going to expand higher. This makes sense because we would have done that within the drivers, right? So when I look lower on these time frames, there's some additional stuff that I haven't even taught you guys that kind of hints towards this. But if we just simply look here, right, we have a C2 closure on the prior to 930, right? So some sort of reversal, right? And then we see 930 expand away from that. You see that? So here is 930. It's expanding away from that, which is good. That's exactly what we see. You see how repeatable these things are, right? And then we see 10 a.m. This is my trade that I took here, but on NQ. Right, and there's SMT here as well. So we're pairing the high of the 10 a.m. candle with SMT, which is essentially just this, right, but fractally. And then we can assume this is the high of the candle, right, which is just the hourly fractal model, but on the 3-minute instead. Because I view the 3-minute, the 5-minute like the same thing. Like this is the opposing candle that created SMT and swept out this high. It's not this. It's not this. This move here. Like I don't really care about this like indecision candle here. I'm more so concerned about the last violent up closed move, which is this. So you can just do the 3-minute. It's like the same thing to me. So yeah, we have the hourly close, SMT. This is just GXT, right? So the 4-hour candle is opening up within an already existing fractal model, which is the hourly close. So this is 930 reversal. You can view it within hourly candles. So if I go to gold here, we can view that we have 7 a.m. reversal and 8 a.m., which is the driver expansion. When I go to back to like a NQ or something, we see 930 reversal, 10 a.m. continuation. If I go to like this day here, holy shit, what the fuck? When I go to this day here, we have 930 reversal, 10 a.m. continuation. So I traded every single day this week. If I go over to here on ES, we see 9 30 manipulation, where we have the fractal model here. So this is GXT, right? This is what we traded. 10 a.m. continuation. Every single day was some sort of 10 a.m. continuation. Now this is a trade that I took, a very small move, and I'll go over this day, and we're probably going to end it here, because this is, a lot of people got confused about this, right? There's like an SMT on both sides. How do you know which SMT? How do you know which asset's lagging? Because one is lying right now, right? Like one of these SMTs is fake, right? How do you know which one is fake? Well, what do you see at the previous high SMT? Right? We see price expand away, right? Creating a fair value gap, which is a reversal signature, right? What happens when we take out this external low? What do? We consolidate, right? So we don't trade away from this. We don't trade away from this continuation signature. So what this tells you is when you see this even on the stronger asset, is you see a continuous signature even on the stronger asset. So this tells you that NQ is lagging and this SMT will break. So this becomes a draw on liquidity. But I'm not going to trade NQ because it's stronger, right? So if 930 reversed, you see this, it hit a key level. Within this hourly candle, we have a 30-minute close. So we're simply opening up 10 a.m. within a lower time frame reversal. I can simply frame this trade from internal to external, right? Isn't that just simple? And I target EQ of this range here because it's the weaker asset. And that's my trade for the day. I don't have to be right about anything else. I don't have to be right about it being a bullish day. This logically makes sense. It's a lagging asset. This SMT will break, right? So obviously, if this is going to expand at this low, then ES will also expand, right? Obviously, right? So that's why I traded. It's a simple move. Literally from one candle, I got 2R right here. One candle. And then we hit these relevant objectives, right? So this is this SMT doing its job, right? This SMT did its job by pushing price to reaccumulate off of these relevant swings, right? Because you see the space between these swings and these swings, right? You already have a reversal candle. We're already not anticipating the first day to reverse, right? Especially on NFP. I actually expected this for this week. And again, expectations they're not that important to me, right? Because we just react. That's how I do it, at least. So I'm not really expecting price to pick a side here. I'm expecting price to kind of trade within this range for NFP to kind of expand, right? But obviously we have Trump, YAP, and obviously that's pretty significant when we look at this price over here. This is all tariff talk here. We have huge ranges, right? So when he yaps, I mean, look at this day, right? This day reverses in 1 hour, this whole day, 1 hour, which then it confirms a bearish weekly profile. We just open high first into a model. So we're always trading models. We have an internal range. You take it a range low. You have an internal range of liquidity to external range of liquidity. And then it's just about, do we manipulate this low and create a continuous signature? The fact that we don't manipulate this low means we can continue, right? But yeah, probably end it there, guys. I will get to these questions. If you guys have any more, just go ahead and like repost these in you know, maybe your journal or whatever, right? The Fractal Model chat or whatever. Probably end it here, guys. But yeah, my computer comes in like today. I'm gonna start making YouTube videos probably. I'm gonna learn how to edit, make YouTube videos for y'all, and just like update or upgrade my content creation in a sense. And then TDBX can retire from cameraman. Yes, sir. All right, y'all have a great weekend. Hopefully I found this insightful. Next week will be a good stream, so you don't want to miss that. So catch y'all later. Have a good weekend.